Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, September 20th, and we're going to follow up on what we were discussing yesterday, which was waiting for major announcements to occur before you actually place your trade or before you actually start getting involved with the markets. Well, we had talked about this with the Fed announcement today and said, be careful of choppy markets yesterday, which we were having, and be careful of, again, choppy markets throughout the morning today, going into the afternoon, which is 2:15 right now, because at 2 o'clock we had the Fed announcement, FOMC rate decision, and then Yellen's going to be talking here in about 15 minutes. Now, this is another example of why. So you can see, this is gold, for example, today, just moving sideways and chopping around, going nowhere. And then finally we get the Fed announcement and gold picks a direction and it shot straight down. And now we've hit significantly undervalued and gotten somewhat extended there. But my point is, the real move doesn't actually take place until after that announcement comes out. And you can see the same thing. Here's 30-year bonds just chopping around, moving sideways today. Didn't really do much until the Fed announcement, and then we actually start to move. And the same thing goes for the currencies. Here's the euro. Just again chopping sideways, and then announcement comes out, and boom, euro ripped through the floor and is still continuing to trend lower. It just hit a new low while we were talking. And then the same thing goes for the indices. Here's S&P. Chopped around yesterday, chopped around today, and we're starting now to finally move here. But one simple way of being able to tell, and I've talked about this previously, but it's been a while, is being able to tell when a market is in consolidation or when we can expect a bigger move to take place, is you basically look at the range that we've been trading in, and are we going to break out? And you don't want to mess with it as long as we're staying inside of that range. But as soon as we break out of the range, then you're okay to start moving. So for example, there's the range in the S&P. Here's gold. And again, I'm drawing these on a 30-minute price chart, by the way. Here's the range we had in gold. So anything inside of this range, you don't want to trade because it's in consolidation. Once we break out of the range, then the market has the ability to actually run, and we can be looking for a bigger move to take place. So once again, major theme of today is just be patient when you have these announcements coming up. A lot of times it's better just to sit on your hands and just leave the markets alone going into the news. And then once they take place, you can look for them to move. The other thing is just on any day in general, if you're trying to identify when a market's in consolidation or when it's running, the best way to do it is, in my opinion, just simply look at the range that market's trading inside of. Is it inside of a range? If yes, you don't mess with it. If it's outside of the range or outside of the range it was trading in previously, then you're okay to trade because the market is trending or has the ability to continue to move. So that's all I have for you for today. I hope it helps. I will see you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you're enjoying these videos. And until next time, happy trading.